So unless you've been living under a rock these past few weeks, you probably saw that growth stocks and specifically tech stocks have gotten demolished. And today I wanted to kind of give my thoughts about what's going on, to let you know what I've been doing, and also to share out my plans for the future. As I mentioned a few times on this channel, I've been investing for close to 2 years, and personally I think that this correction that we had in growth stocks is really healthy. I'm really happy for this opportunity. I got to buy a bit more during this dip. What really pisses me off though is people that only just got started into investing just a few months ago, like let's say 3 months ago. You probably bought some of the ARK ETFs or some of the growth stocks in the ARK ETFs right at the top. Let's say they bought Twilio at close to $500, right? And right now it's about $300 or maybe even less. They were previously, just a few months ago, they were praising Cathie Wood, they were praising ARK Invest, they were like, oh my god, Cathie Wood is so great, oh my god, the ARK ETFs. And right now they've gone full 180 to where they're like, oh my god, the ARK ETFs are so overvalued, how could I not have seen this? Well, guess what? When you invest in something like the ARK ETFs or in growth stocks, you should kind of know what you're getting into. Because the thing is, of course, many of these companies are not profitable, but you should know that when you're investing into these type of companies. You should also know that many of the successful companies that we have nowadays, for instance Amazon, for instance Tesla, many of them were not profitable for many years. So that's not a huge reason for concern in my opinion, or at least it shouldn't be a reason where you're just like, oh my god, these companies are not profitable. Well, I mean, didn't you know that when you invested in them? You just blindly invested in an ARK ETF because someone on a Facebook group told you to? Now, if we take a look at one of my portfolios, the one which I kind of mentioned here before, I just started this one in January. It's primarily a tech portfolio. So almost all of the holdings in it are either tech or are cloud stocks or cybersecurity, which, yeah, I guess it's all tech anyway. So the reason why I'm not at all worried about this is because if you look at most of the growth ETFs, if you look at most of the tech ETFs on a long-term time horizon, so I'm not talking 1 year, I'm talking like 10 years, I'm talking like 15 years, most of them have continuously outperformed the broader market, and the reason is quite simple. This is a secular trend, and what this means is that this trend is not going to go away just because we have inflation. I was hearing Kramer on CNBC the other day about how we should dump the lockdown stocks because right now we have inflation and we should probably move on to cyclicals. Well, I don't know if Kramer realizes this or not, but these stocks were grossly outperforming the S&P 500 even before we had COVID. So many of these stocks were beating the S&P 500 by a landslide, and they didn't need any sort of lockdown for that to happen, right? That's what a secular trend means. It means that it is a trend where a society moves into a certain direction, and just because you're investing in that stuff, so for instance, let's say cybersecurity, which is a sector which I'm really bullish on, it doesn't take a brain surgeon to know that cybersecurity is going to continue growing. Now, obviously, it doesn't mean that you're buying a cybersecurity company such as CrowdStrike at any valuation. You still have to look at how fast they're growing. You still have to look at many other factors. Are they a leader in the industry, or even if not, do they have some sort of moat? Is there any fierce competition for them? And you know, sometimes, frankly, you buy multiple companies because you cannot be fully 100% sure that your company is going to come on top. But anyway, let's say you buy 3 or 4 cybersecurity companies, or you buy a cybersecurity ETF like I recently purchased, right? So that way you have exposure to the broader sector. This kind of sector is going to continue to outperform whether we have inflation, is going to continue, in my opinion, to outperform if you have a long-term time horizon, like let's say a 10-year time horizon or maybe even more, if you don't need the money right now. And the fact that we are currently having a pullback is no reason for you to panic sell. But if we're talking about companies such as Shopify, if we're talking about companies such as CrowdStrike, if we're talking about Mercado Libre, we're talking about Twilio, about Roku, about Square, I don't see most of these companies going away. Maybe some of these are going to go away. Companies like these are the future Amazons, are the future Apples, are the future Microsofts of the world. And if you take a look at their growth, people see that the stock price obviously has gone down, and like I said, maybe this pullback was probably deserved, but these companies are still kicking ass. Many of them are beating earnings. Many of them are beating revenues by close to 100%. A few of them are even surpassing 100%. For instance, recently we saw Roblox. Snowflake is gonna be reporting quite soon, so I'm really interested to see that. I also bought a bit more Snowflake these weeks. But yeah, what you have to consider is, like I mentioned in the value versus growth video, which I put out a few weeks ago, companies such as, for instance, Nvidia or such as Netflix, which right now I'm not making a case that necessarily Netflix is going to grow a lot more in the future, but I'm making a case that the stock has like more than 20x like in the last 10 years, okay? So stocks such as these, if you take a look at Netflix, for instance, they had a drawdown of over 70%. They had multiple drawdowns of more than 30%. And that's the nature of the beast with these growth stocks. So what I really hate is people that are consistently talking about growth stocks whenever they're going up like to the moon, like they were like just 6 months ago. And right now, as soon as they see that they're down 30, 40, 50%, it's like right now all the bears come out and they were like, see, I told you that Palantir was overvalued. And you know, maybe it was overvalued. It depends on your time horizon. Some people even make the case that today it's way overvalued. Just the other day on an investing forum which I'm in, we have this guy there that knows a lot about the market, but recently has kind of become like, let's say, a bear. And that's fine, you know, you can go through phases, but he was sending me a video, or he was sending us a video, not specifically to me, where some folks were making the case that Palantir, even at $17, I believe, or $18, was still tremendously overvalued. And they were comparing, for instance, the price to sales of Palantir. They were comparing that to Oracle. Like, I don't know what worst argument you can make and compare Palantir, which is growing at 50% year over year. They have a tremendous moat, and you're comparing it to Oracle, which is a company that is barely stagnating. It's potentially even declining. That's kind of like you're comparing a, like, let's say a sports car, or I'm not really into cars, but like, let's say like a kick-ass car that's electric, that has everything that you need, is all software based, has full self-driving and stuff like that, and you're comparing it with a rusty old car and saying, well, like, you know, this is more expensive. Well, obviously Palantir is more expensive than Oracle, and it should be for good reason, okay? Because there's no way in hell that Oracle is going to, let's say, 10x in 10 years. With Palantir, you can make a point that maybe it will disappear or that maybe it will stagnate. I don't really believe that. I think it can easily 5x if you have like a long-term time horizon. And this is not specifically about Palantir. I'm talking about many of these cloud companies which I'm invested in. Just to show you a bit of what I've been doing during these past few days, I bought a bit of Square, I bought a bit of Snowflake, like I mentioned, I bought some Shopify. I also bought some ETFs, like for instance the cybersecurity ETF, which I mentioned there. So yeah, basically just wanted to share with you my thoughts for the day. If you have a different opinion or you have a similar opinion, feel free to leave a comment to let me know. And if you got any value out of this video, please consider smashing the like button. Thank you guys so much for watching, and I'll see you in the next one. Bye bye.